and it's just been building up. I got so many students that keep asking me, and first of all, congratulations on the sale.
Thanks.
It's a charm, which is awesome. A lot of people want to know if there's anything new that's going to be going on now with the new merger with Tastyworks. So I don't know, you could probably throw on stuff like that. But
sure, I'll talk about it. Sure, if you want me to. Of course.
Yeah, I know, but we got a lot of stuff I want to talk to you about, and because I'm getting a lot of feedback from students and traders, regarding about your take on, even though watching your show, but as a day trader, they want to see what your perspective on it and stuff like that. But how's everything going?
You know my rule. Nothing's off limits with me. You can ask me about anything you want. I don't care. Ask me any question. I mean, everything's great. I mean, I'm working my butt off. So haven't had much of a chance to breathe. But other than that, I mean, like you said, the markets were pretty busy today. And yeah, I mean, I traded up a storm, so I'm ready to talk about anything. I got every market that traded today. I was there.
Well, you know what? It's been not too long ago. It's been a little while that you've been back. And I guess one of the questions people always ask me is like, so what is your take on this whole, Wall Street bets thing? I mean, and not only that, but, following up with that call, what happened with, because, with Robinhood, because I get a lot of people that are asking me this situation. I was actually going to do a video on it and put it on YouTube, but I want your take on it because a lot of people don't understand like what happened with not just the Wall Street bets of Reddit, but what was GameStop? What was Robinhood's goal? Like, what's going on with this margin thing? Why were people getting locked out? What were they worried about? Because people are worried about like opening accounts with other people now. And obviously a lot of them coming to you regarding it. But what makes you different that it can't happen with Tastyworks than to happen with Robinhood?
Well, a couple things. First of all, they're different topics, but I'll start off with the whole GameStop, Wall Street bets, Reddit, the whole thing. And I won't spend a lot of time on this because I think we've beaten it to death, but I've done a bunch of interviews and podcasts and debates on this. I'm one of the people that's in the camp that believe that it was a very important moment historically in the world of finance. I think it was a very important moment. And what I mean by that is I believe it was truly a transformational moment where something that you and I have been working on since I've known you and since I've been in this space, which is almost 2 decades now, we have been working to promote the world of active investing, moving people from passive to active and making sure that people become engaged and they learn how to manage their own finances. To me, it's the most critical and one of the most important aspects of my life and my job and everything that I've been building for 2 decades. And that is moving people away from being passive, because I don't think there's anything that's great about being passive, into a world of active trading. And I think the GameStop situation, the Reddit, Wall Street bets, everything combined was essentially the perfect storm. And what it did was it was the coming out party, the official coming out party. Even though you've been on this for 2 decades, I've been on this for 2 decades, we never were able to, let's say, move the masses, I have a group of, let's say, 1 million people that listen to me, and you have your own followers and your own clients and things like that. But we've never moved the dial to where it's tens of millions of people. And I think what happened with Robinhood and a few other like firms is they actually moved the dial and they engaged an entire generation, my kids' generation, maybe your kids' generation, into the world of finance, which is, believe it or not, a great thing. And the problem with it was, whenever something great like that happens, it's usually not always for the right reasons. And like I said before, the GameStop situation to me was a perfect storm. It was a combination of very strong longs, very complacent shorts, and a stock that was just easily manipulated. Now, in the case of Robinhood, I actually believe that they played a huge role in this transformational binary event, which is moving people, into finance. The problem was that they weren't big enough for the moment. Like, the moment overwhelmed them. And what essentially happened was it was a combination of a bunch of factors. The moment, the regulators, the clearing, everything combined was too big for them. So they suffered a horrible reputational blow. Will they recover? Of course they will. They already have recovered. Is this going to be damaging to the industry? No, it's not. Was it damaging? Was it at least, did people question the integrity? And the answer is, of course. But, other than a reputational blow to Robinhood, I think the industry actually performed quite well. And I just think the moment overwhelmed Robinhood. Now, when I say overwhelmed Robinhood, what I really mean by that is, Robinhood's self-clearing. And one of the things when you go self-clearing is you have to spend a lot of your energy and focus on the clearing aspect of the business. And I think that, the amount of capital required to cover the outlier risk in GME was so great by the regulators that they just couldn't keep up with the net capital requirements from the regulators. Now, I'm going to give a slightly different spin on this whole thing than everybody else. I believe ultimately at fault, there are two parties for what happened. One is the regulatory bodies, specifically the SEC and FINRA, because they have waited way too long for this to happen. The writing was on the wall for the last decade that we needed to move clearing and execution. Like when I make a trade with you, Fausto, and we're trading options together, it's cleared the next day. If we're making a trade and we're trading futures, it's cleared same day or next day. If we're making a trade with options, it's 2 days later. And in the process of 2 days, a lot of things, it's too slow. We can do things like today, we can basically transfer digital assets instantaneously. There's no reason to wait 2 days to clear something. So I blame the regulators for sitting on their butts for an extra decade or two and not getting it done to move off legacy clearing infrastructure into modern infrastructure. The second thing, and you're not going to hear this from anybody else, is I blame the exchanges, because the exchanges have not a fiduciary responsibility, but they have like a fiduciary responsibility to the retail investors. For the last 2, 3, or 4 decades, they have sucked up to the institutional investors, and they've pushed the retail investors out to firms like us, like retail brokerage firms, to do everything for retail investors. They refuse to do anything. And I feel the exchanges, because they're the ones that make all the money, they're the ones that have the hundreds of billions of dollars of market cap. I feel they have an obligation to push the regulators to understand how much risk there was out there on the clearing side and to make sure all this stuff runs smoothly. If you want to process 225 million quotes a second, if you want to process, tens of millions of orders a day, make it so the system works. It's not that hard. It's just technology. And so I think the exchanges really ducked their responsibility and ducked out and really let the retail investor down. And I think the regulators did too. I think Robinhood, one more sec. I think Robinhood wasn't big enough for the moment. And I think that the rest of the firms like Tasty, who had zero downtime and zero issues, and a lot of the other firms that just all they did was raise margin requirements, which is totally fine. I think they handled the situation pretty damn well. And I think the market making firms, they got picked on, like the Citadels of the world. And I'm no Citadel lover or any high frequency firm lover, but they make the system work, and it worked. They made markets the entire time, and the markets were good.
When I started, if you remember, they had the stupid day trader rule they passed back in 2000. We had the internet bubble, and and one of the regulations they came in is, and this is my take, and I actually spoke to a couple of these even politicians that I see, and I said, dude, you got to get rid of this day trading rule, because let me tell you, it led to this. They feel like if you don't have enough money, you should not be allowed to day trade. So they had 25,000, but what did they end up doing? They give you 100,000 buying power. I'm like, let me get some straight. You want people to come up with more money, but you're going to give them more margin. So I said, why don't you do this? And I said this from day one. And this is what I knew they're going to get caught, because this happens to me every single day, Tom. I'm going to tell you exactly what happens with 2 brokerage firms I trade with. Now, to figure the problem, just let them trade the cash. Just get rid of margin. Just let them trade the cash. You don't need to worry about it clearing. But I know that these brokerage firms make a lot of money on margin.
No. Here's the thing. So let me clear this up, because it's a misconception. Intraday, there is no margin, and for options and futures, there's no margin either. So the only thing that brokerage firms make any money in margin is on overnight positions.
Yeah,
and
but they still give you a 2-to-1 margin if you hold a position overnight.
Of course.
Right. Yeah. So they shouldn't even give them that. It should just be cash.
No, they should. No, I disagree with you on this one. They should give 2-to-1 margin overnight. They should give 4-to-1 intraday. I have no problem with that. What they should do is get rid of the stupid rule. The rule makes no sense. You were right the first time. The rule itself is idiotic. The rule is actually disingenuous. The rule hurts the small investor because
it does.
It puts them in a position where they can't get out of a position when they want to and need to. We have been at the forefront of, we got every single firm. Scott Sheridan, my partner, who's on, I think he's on this call today. We have a whole team on the call answering questions. So if you have any questions, you can just type in the chats, and the guys at Tasty Works on the trade desk will be happy to answer your questions live in real time. But Scott has put together a group of 16 different brokerage firms, everybody on the street. And we were in the process of getting rid of this rule when the pandemic hit. So we have been at the forefront of leading the charge to remove the pattern day trading rule, and we're going to get rid of it, period.
Well, listen, you know what? If you want to sign, I think the best thing to do is, because I think we could sign a big petition. I mean, between all our affiliates and stuff like that.
FINRA knows it's a dumb rule. They made a mistake 25 years ago or 22 years ago for the wrong reasons. They put that rule into place. Today, it is no longer relevant. It is the number one sticking point they have. They know it's a bad rule. Here's another example of the regulators letting us down and the exchanges not stepping up to support the retail investor, because if the exchanges join the fight, they're just so scared of FINRA. They don't want to.
Oh, you're guilty till proven innocent.
That's right. And they're pathetic. So listen, I sit here as somebody that runs a brokerage firm, and also we own an exchange too. And but that's on the future side. But you know, I will fight for every single thing we do. We're an advocate for retail investors, and that's never going to change. Just remember one thing about Tasty, unlike any other firm, we have no professionals, no hedge funds, no prop firms, no managed products. Everything we do is for self-directed individual investors, period.
Just one last thing, and I want to move on to the next topic. The reason why I bring that up about the margin thing, because like if a stock goes up too fast, certain brokerage firms have these algorithms that kick in that actually will say pending and have to go to review. And I'm calling them up, and I have a direct line to the brokerage firm. I'm like, well, you just locked me out of my trade. And meanwhile, this thing could be so volatile sometimes. They just take off out of nowhere, and you see what happens. And then all of a sudden, they just lock you out because they had these algorithms kick in, depending on what was the previous close and how fast it goes up. And they want to go through review, because if it goes against them, if you don't have enough money in your account, I don't know how they figure it out. They can get burned. And that's what they're worried about. Okay,
that's on you. You need to change your brokerage firm, because we don't have. I mean, I'm just telling you, that is old school thinking. And it does not apply. Like at Tasty Works, we do not apply that logic.
Well, the next thing I want to talk about, is obviously that's just a one. There's so many topics that's just been so hot. You have this whole new stimulus package you got passed, and we all knew that that's great for the market because there's more money for everybody to spend. I don't know what the long-term effect is going to be, because I always tell everybody every company's going out of business every 3 months because they got earnings to come out with. But with that said, I mean, there's a lot of industries that are really kicking up. And I know this is like your expertise. Ever since we were talking about this, every morning here at CyberTradingu, I do my morning meeting regarding about when they close down the Keystone Pipeline. I says, listen, they start closing that down. With this whole new Green Deal they want to pass, energy stocks are going to take off. And if you look at a lot of the energy stocks, I mean, you could bring up the platform if you want to bring it up. OXY, gosh. I mean, NRGU is up 14 points. These things are up almost like 200, 300, 400%. If you look at them, all these energy stocks, all these oil stocks, that was up, DET, another one. I mean, these things just in November, they were $2. This is $8. Gush is, obviously all the stock split, reverse stock splits was at 18, at 20. But like you're talking about, I mean, even OXI, $10. I mean,
can you see my screen now?
Yep.
Okay. So Gush is up there. You can see it. Yeah. It hasn't had a downtick in, 5 months.
Right. Gosh, look at this one, the biggest one, I think, NRGU. Another a big oil industry. I mean, just like, look at that tick, just not backing off. All these oils and energy stocks are just literally on fire, just like more or less how we're looking at all the cryptocurrencies. A lot of people looking at cryptos, and they can't trade cryptos, certain people, depending on what brokerage count. But, we're looking at.
Can we talk about that for just a quick second?
Go ahead.
So, because I don't know if you know this, but So Tastyworks is the only major brokerage firm. And I'm not talking about Robinhood, but I'm saying between Interactive Brokers, Fidelity, E-Trade, TD Ameritrade, and Schwab. Of all the major players, Tasty is the only one where you can trade crypto, and I'll show you right now. So here is crypto right on the Tasty platform. We are the only ones that stream. Now, we obviously have the futures too, but we are the only ones that stream live cash markets 24 hours a day, 7 days a week. And this is Bitcoin, Ethereum, and Litecoin. And we'll be adding a bunch more coins. But like, for example, right now, if I want to go out and buy some Bitcoin, I just click here and we're open around the clock. I just bought $100 of Bitcoin. Here's $100 of Ethereum. And here's $100 of Litecoin. And so we stream 24 hours a day, 7 days a week. You do not have to worry about passwords. You don't have to worry about wallets. You don't have to worry about moving money to Coinbase or a separate account. Everything sits in the same account. And then you just flip the cards over and go right back to where were you a second ago? You were on Gush or NRGU. I'm sorry, right here. All the same page, boom, right in front of you. And this is the only platform that allows you to do that.
Patrick said he didn't know that.
Well, every Tasty customer has access to it. All you got to do is just check one box and say, turn on crypto for me. And it's on. And
Beautiful.
so
That's awesome.
We launched this a couple of weeks ago. We've already traded.
I didn't know you had this. I'm just thinking about it. I didn't see this last time.
We just launched it a couple of weeks ago. We've already traded on the platform $110 million of notional crypto in just the first 2 weeks. So our customers have been trading 7 days, literally 7 days a week around the clock in crypto.
Wow, that's amazing.
And it's all built, again, it's built right into the platform. It's super simple, and every single Tasty trader can trade it. You just go to the drop-down menu here where it says table, click on crypto, and this will pop up. We also offer Bitcoin Cash right now too. So Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. And then again, we'll be adding more coins to this, and we'll also be adding other products. So we're probably going to
is there going to be any options or any option plays on these?
Right now on cash markets, it's not legal in the U.S. So right now there is no firm that offers options or the ability to short, because in the U.S. the regulators consider cash crypto as being as if you're going to short it, you have to actually borrow something, and that means there has to be margin involved. And so then they consider it a future and not a cash market. And right at this point, there's no option market on it because it's a cash market that doesn't support the ability to buy and sell. You can only buy. So that has nothing to do with us. That's just the rules in the US. We are in the process of, trying to look at different things. Now, we also are one of the owners of the small exchange. So on Tastyworks platform, you can only trade small exchange futures on Tastyworks and on Interactive Brokers. And on the small exchange, we'll be launching a Bitcoin product, hopefully by June, and then it will have options on that Bitcoin product. So we're super excited about being the first exchange to launch a small notional product, and you'll be able to trade it on Tasty, and it, like I said, also on Interactive Brokers if you have an account there.
Wow, that's amazing. Now, I'm going to ask you a very dumb question because people ask me this all the time. If I buy you bought that 100 shares through, where does that money go? Like, where's it? Like,
okay, so I didn't buy 100 shares. I bought $100 worth.
$100 worth. So
crypto trades in dollars. You don't have to buy coins or anything like that. You just buy whatever. I could buy. Here, I bought $100 before, and now I'll click up. I'll buy 300 more right now. Okay, so that's another. So now I just bought 400. So it doesn't make any difference. So, and those are real trades, by the way. Everything I'm doing is real. So, so the way crypto trades is they now are taking that money out of my balances, okay, and they are transferring it to it's a secure relationship. So we own a piece of a company called Zero Hash, which is a digital asset settlement company. And what happens is that Zero Hash actually makes the trade with the market maker, and then they take the money from my account and it goes into a digital wallet somewhere and pays the firm that made the markets and that actually sold me the Bitcoin.
And then if they want to take the money out, you'll pay them back.
Just goes back out the same way.
Goes back same way.
Is And the cool thing about this is there's no trust factor involved. Like, you know how normally if you went to some crappy little, let's call it crypto company,
Okay.
you're worried about it because you're worried about your money. So
Right.
you don't have to worry about that here because we're clearing it, we're guaranteeing it.
Now, how does blockchain get involved in that? Do you have anything to do with that when they do the trades through you?
No. This gets traded. Everything. There are secure tokens, and they are they're basically just paid for. Just think of it like almost like any other transaction you make. You just buy something, and it's
Sell it.
tokenized. Yeah, it's a secure token, and it goes back the other way.
Now, do you think, and another question people always come up, what would happen, or do you think that the United States will put regulation on crypto trading? Because in my opinion, if it gets too big and people start doing it through buying like hamburgers and stuff, I mean, because I always learned being in the trading business that the way banks make most of their money is obviously currency, and the spread in Forex and stuff like that. But
Sure.
What are they going to do? What do you think that they would ever put regulation on that, and that will affect it, or no? Or it's getting too big right now?
There's a lot of questions about that, and I would purely be speculating. But what I will say is, I do not see cryptocurrencies as being transactional anytime soon by individuals like you and me, and by anybody else that's listening today. I don't think you're going to be buying a Tesla or buying a hamburger or a hot dog or anything else using crypto. You might have a crypto credit card where the balance goes into crypto, something like that. But generally speaking, it is not going to be transactional. But what crypto will do is, you have a lot of people on today, and a lot of people you have listening today may not live in the United States, right?
Right.
And so you have a big following all over the world. So let's just say that somebody's listening to this discussion today and they want to open an account at Tastyworks. Do you know what a pain in the butt it is to go through an international bank and do a multi-day international wire to send it to us? They nick you for like 0.5 to 1% going out. They nick you for 0.5 to 1% going in.
Right.
And it also takes like 2 days and all this process. It's very hard to fund an account and to move money around globally.
Like Canadians. I had that problem with Canadians.
Sure. So what crypto is going to do is they're going to allow you to move money globally instantaneously in using whatever, let's say use Bitcoin, because that's obviously the biggest marketplace and it'll be the tightest market. So you buy something, you'll use crypto to move $25,000 or $50,000 or $100,000 over. It's only one coin. You'll buy it and you'll sell it. Remember, we have the lowest commissions too on crypto in the whole world.
That's the next question. What is it?
We charge 1% of the notional with a max of $10. So everybody else doesn't have a max. So we cap it at $10. So if you trade $100,000 worth of crypto, it's only $10. So if you move $100,000 from Canada to the US at Tasty, when we're able to do this, it'll cost you $10. Right now, if you were to do it, it's going to cost you $1,000 if you use JP Morgan.
Right.
Okay. So it has a practical application for moving funds. And the coolest thing is, so I just bought a bunch of crypto just while you and I were just doing this, but it also just fits in my position, and it's also not correlated to my stock positions or my option positions. So it has this kind of it's a non-correlated asset. So it's a really nice diversification. The reason people tend to not buy crypto, generally speaking, is because they just don't want to deal with moving money out to some other, third-party cash broker. And this way, when you can have it built into your entire portfolio, it's super cool.
I think you're right. That's one of the biggest issues. I think that was a big issue for everybody that didn't want to buy cryptocurrency. You went to some type of ATM machine in Manhattan in some alley someplace, and nobody know where the hell you bought.
That's right. But now, isn't it easy? You can just do it right on Tastyworks. And listen, we're just the leader. Everybody else is going to have this. People are seeing what we're doing, and every firm is going to copy us. But like I said, we bought our own digital asset settlement company so that we made sure that we controlled the whole process. And we feel really good. Listen, whether crypto is here to stay or it's not, I'm betting that it's here to stay, but I have no idea. How well it becomes integrated and embedded in our society. I think there will be a central bank somewhere that is the first to really integrate, crypto. You're seeing it basically happen around the world, but nobody has taken that next step over the line yet. I don't know if it'll be China. I don't know if it'll be, some other country. Maybe it's Estonia. I mean, who knows?
Right.
But maybe it's Canada. Maybe it's the U.S. I really don't know. But somebody's going to do it. And the question then is, at what point, and how far does it go? I will tell you this, Fausto, which I think is really important. We are just beginning to scratch the surface when it comes to alternative assets. You're seeing it now with NFTs. You're seeing with other things like that. So you're going to get, alternative assets are going to play an important and prevalent role in trading and in investing. So this is not something that's going to go away.
All right. Well, so where do you think it's going? Where do you think it'll probably end up going? I mean, I don't know
if crypto. I don't know if I'm not long Bitcoin here at $57,000. I think it's ridiculously expensive.
You're long $400 for when we saw.
Well, I'm long more than that, but that's not. I'm not officially long crypto here. I just trade it back and forth. But the reality is that I just want to show you how easy it was on the platform. But the reality I think is like, listen, I think it's expensive right now. I think 57,000 is expensive. I think Ethereum's expensive. I think Litecoin's expensive. But I think the product's here to stay because I think alternative investments, just like you're seeing non-fungible tokens take off, I think you're seeing that there's an appetite for risk. Like you saw what happened today in GME, right? You watched it.
Oh my God. It just fell out apart. It's just like the thing took off. It's doing great. And all of a sudden, see, that was my question I was going to ask you, like, about crypto. Cause people always ask me that, could that happen? I mean, it does happen to crypto, but it's not, you can't short it. You can't short crypto.
Yeah. There's no shorts in crypto, but here's the thing. So let me ask you this question. So GME got to almost $300 and something today,
350 right? Almost.
Okay, almost 350. Let's just say if it closed around, where it closed at, I don't have it right.
Closed at 266.
Okay,
265.
So let's just say it closed at 266 right there. Perfect. Right. Would you rather, because 100 shares of GME at 266 is 20, let's call it $27,000. Would you rather have 200 shares of GME at $270 or 2 Bitcoins?
I think I probably would rather have 2 Bitcoins.
Of course you would. Everybody in the whole freaking world would. So then maybe Bitcoin's not that crazy.
It's not. But listen, I trade this thing all the time. I know how this is like a crack stock right here. I mean,
of course, but it is what it is. So
right,
$170. And so we sit here and say Bitcoin's too expensive, but you know what? I'd rather own Bitcoin than GME.
Well, I just know that watching, I mean, listen, everybody's getting into it, as in like a lot of mutual funds starting to buy into it. A lot of banks starting to buy into it. I mean, you saw Elon Musk bought into a ton of it, and he was like throwing like little hints on his little Twitter, saying, hey, look at bit. And all of a sudden, like 2 weeks later, that's bought 100 million, whatever it was.
When you're the richest guy in the world, everybody has to listen to you.
I got to give a guy a lot of credit, man. That's great entrepreneurship. All right, so listen, the next question I was going to ask you regarding the Bitcoin, but so what is what's your thoughts on like what's with all this regulations going on, and what do you think? I mean, have you watched any of these energy stocks at all and see what's going on?
I am trading some of them, not the little name, not the smaller names like you trade. I don't trade a lot of that stuff because I mostly, but I did trade, like, for example, some XLE today. I traded some crude oil, a bunch of crude oil yesterday. I traded the futures yesterday. So I have a bunch of positions on in crude oil futures options. And I have a bunch of positions on in like, XLE, XOP, XOM. I'm trading some of the
Where they're going though. That's the question. I mean, like they're breaking.
Well, I'm just selling a bunch of premium in there. I'm not bullish on them per se. I'm actually bearish on crude oil here.
You are, okay.
Yeah. I'm short. I'm delta short in crude oil, but I'm mostly short premium.
Okay. I don't know. I mean, I'm a little nervous. These things are breaking all-time highs, and they're saying gas is going to go to $4 a gallon by the end of the year. And it's just, when you look at it.
Well, natural gas can't get out of its own way. And if you're looking at, the hard thing for me about crude oil and gas is, I drive a Tesla now. And so like, I don't buy gas anymore. So like, it kind of freaks me out when, I guess I don't even care what gas prices are, so it's the weirdest thing. Like you kind of lose track of, like I don't go to Costco anymore to buy gas.
Please, I love that store. It's my favorite store. I max out my money all the time when I
Oh,
go
no,
there.
no. I love Costco. I just say I don't buy gas there anymore.
Like, I love it.
Yeah.
I wish I could park my boat there. Actually, I was gonna be scared with a boat. Um, so anyway, regarding about the options play, another question someone came to me and asked me, and I know it's a really dumb question, but a lot of people are trading stocks and they want to learn how to hedge themselves, but they get nervous to trade an option because they hear how speculative it is. Could you just explain somebody for a newbie to come in? What's the safest and easiest way to understand how to do just a basic option, on a stock? I mean, I know that's like a dumb question, but that's someone asking me like, how do I buy a stock, but like, just do like a basic. So if someone could like learn how to get into a trade and understand like, okay, where's my option going? How can I track it?
Okay. Well, here's the cool thing about our platform. We are indifferent, and we're not. Let me back up for 1 second and explain what I do for a living, because I think it's important. So I believe that my role as the CEO of Tasty Trade, which is our network, but we also own Tastyworks, which is our brokerage firm. We also own another brokerage firm called Doe. I believe my role to individual investors is to facilitate opportunity. So Fausto, you're my customer, and my role to you is to provide you with the best technology in the world, the fastest technology, the best content, and most importantly, access to every product and every strategy. It's not my job to tell you what's going to happen next in the market or anything like that. What I feel my role is to Fausto or any other John Smith or John Doe, whoever else it is to facilitate opportunity. And you facilitate opportunity by providing a platform that offers everything like digital assets, options, stock, futures, options on futures. We offer everything. And that way the customer can decide, hey, I can, what strategy do I want to use and what underlying. Now, the other cool thing about what we do, and you know this, is we don't have any restrictions as to what you can do regardless of account type. So if you want to trade anything you want to trade, you can trade in any type of accounts. You want to trade an IRA account, go right ahead. You want to do a naked put in an IRA account, naked call in an IRA account, a strangle, go right ahead. You want to trade a futures options in an IRA account, go right ahead. We're the only firm that doesn't have any restrictions as to strategy, product, or account type. Now that's super cool because that's what we mean by facilitating opportunity. And then we give you killer content behind all that.
Well, so why are like all banks and brokerage firms so old fashioned and don't all do it? Because they don't. None of them really.
Of course they don't. Because okay, I'll ask you the next question, which I love to put out there, which is most of these firms are run by people that they're managers, but they're not junkies. I'm a junkie. This is my business. I live this business. Like here, Fausto, I'm going to throw you a question to you. Name the CEO of another online brokerage firm.
Another online brokerage firm?
You name me one CEO. Name me the CEO of E-Trade, Schwab, Fidelity, TD Ameritrade. Name me the CEO.
Someone said Victor Jones. Did I get away with that?
No, he works for me.
I have no idea. I really don't care. I'll be honest with you.
Of course you don't. And you know why you don't?
I'm a junkie.
Because none of those guys trade. Yeah. And none of them even, and you asked the question a second ago. You asked the question of why don't they offer all these products? Because they don't trade.
That's what it is. Right?
And
you don't think like a trader because like as a trader, and I don't like to compare this to gambling and stuff like that, but you just know the leverage. Well, how about if I do this, or I could do that, or it could be this way?
Because everybody doesn't take the approach that we take, which is to facilitate opportunity. Most firms, their goal, their firm objective is to make money and take the least amount of risk doing it. Our objective is to provide an opportunity for the customers to do whatever it is they want to do so that they can potentially make money or have opportunity. And it's our job to facilitate that. And so we go way beyond what any other firm does. Now, in the process of doing that, now you asked the original question of like, how does somebody do that with options? Well, you see, to me, I'm product indifferent. We do about 80% of our business in options and about 20% in a little less than 80% in options, a little less than 20% in futures and futures options. And then about a couple of percent in digital assets and a couple of percent in stock. And the reason that we do it that way, or the reason that active traders gravitate towards that, is because stock is very capital inefficient. And when you're talking about 2021, which we're in right now, capital efficiency is really the difference between how many different things you can do. Not everybody has unlimited capital. In fact, most people, their biggest restraint is capital. So we focus on doing things that are capital efficient. So let's use a stock, a cheap stock that had earnings this afternoon, AMC. You probably trade this, don't you?
I traded this morning. I did really well. Thank God I got out of that thing. That thing was just.
Yeah, well, when GME broke down, AMC broke.
And the other one, Kirsch. You see Kirsch, KOSS? That was the other crack stock out there.
Yeah, I don't trade
on that one too.
But so AMC rallied up this morning. It traded up to like 11.5 or whatever. But so a couple things here. Traded 255 million shares, so it's totally in play. But the person asked, they said, well, how would you trade the stock if you were going to trade, stock versus options? Because you asked that question, right?
Right.
Okay, so let's just open up a few April options here, just as I don't need this many, but we'll just open up a couple of April options. So this is the Tasty platform, and this is the current stock price here. Now, again, this particular stock had earnings this afternoon. I think the earnings must be out. It's up about 50 cents. So there's 37 days to April expiration. The implied volatility is right here, which is 230%, which is huge. It's going to come down tomorrow. And here's the cool thing. We show you the expected move over the course of the next month, which is $4.91 or $5. So the first thing that we give you is context. And if you're going to trade an option, you want some context. And the context being is, what do all these numbers mean? What do all these prices mean? And essentially what they mean is this stock's going to move because it's just like the most efficient marketplace in the world. By breaking down all these numbers in a Black-Scholes model, we can figure out that the expected move over the next month, it's like a bookie making a line on a football game, is just under $5. So if you were looking at this stock right here and it closed at basically at $10, you would say the high it's going to get to by the end of the next, oops, I'm sorry, I did this the wrong way. The high it's going to get to by the end of 37 days from now, or April expiration, is about $5 higher. So from 10 to 15, or $5 lower from, let's call it 10 to 5. Okay. That is the range of this stock over the next 37 days. And one of the cool things about options is they afford you the ability to see that because they provide context around where people are willing to place their bets. You can also see this in something we call the curve mode. Actually, you can't see this right here because it's a little, let me tighten this up. Okay, there you can see it. Let me just widen this out just a little bit. I'm gonna make this a little tighter by switching. Hang on one second. Let me just move this in so you can see this just a little bit better. Hold on one second. Let me just make this a little clearer. So, hopefully this will come up a little clearer this time. No, I can't get it. When I'm on Zoom, sometimes it doesn't. I can't get it to. I can't get it to the extra. It uses up too much bandwidth or something. I'm not sure what it does. But I'll go back to this for a second. Let me clear this. The expected move is between 15 and 5. Mm-hmm. And so when we look at expected move, that gives you an idea of what to do. But now let's say, Fausto, bullish or bearish in here, AMC?
I'm bearish. I can see things trending down. I see big orders coming in right now.
Okay. I mean, this 50-cent move, I agree with you, means absolutely nothing. I went home flat it tonight. I just traded it for earnings, and I sold a bunch of at-the-money strangles, so we'll see what happens tomorrow. But let's say you're looking at it in April, and you're like Fausto, and you're a little bit bearish, and you've never traded options before, and you want to do something. There's a couple things you can do. The classic bearish play, if you were just trading stock, is you would short the stock, right?
Right.
Okay.
It's an option. That's what they call it.
Yeah. So you short the stock. So you just click on the bid, that sells stock. And if you wanted to use an option to combine it with short stock, if you were buying stock, you'd sell a call. But if you're selling stock, because Fausto's a little bearish, you'd sell, like, for example, an out-of-the-money put. We call this a covered put. That's probably one of the more conservative plays. And as you can see down here, it has this, we show you the Greeks. So this is your probability of profit, POP. It has a 73% probability of profit. Now, why did I just bring that up? Because you said, show me how somebody who's never made an option trade before might make an option trade and why they would make the option trade. Mm-hmm. And if you just outright buy or sell stock, it's a 50-50 shot.
Right.
If you add a short put to that short stock, it goes up to being a 73% probability of profit trade because you are improving your basis. And then all of a sudden, the reason somebody would do that is for a higher probability of profit. So if you have a higher probability of profit, what's the downside? Well, you have a fixed amount that you can make. That's all. Instead of unlimited profitability, you have a fixed amount that you can make. But that's one way to look at options. That's the simplest way. But how else can you do it without even buying the stock? Well, for example, if you're bearish, like Fausto said he is, you can buy the 10 puts and you can sell the 8 puts. Now, if you did something like that, let's make it actually a 3-point wide. Let's buy the 11 puts and sell the 8 puts. Now, in a situation like this, you can buy an in-the-money put spread. We call this an in-the-money put spread. Buying the 11 puts, selling the 8 puts, it can go to $3. You pay around $2 for something like this. So you can risk 2 to make 1 with a 66% probability of profit. That kind of a trade. You can do something, for example, if you're bearish, you can sell the 11 calls and buy the 14 calls, or let's buy the 12 calls. Let's make it a little shorter. You can sell the 11s and buy the 13s. And so you can sell a call spread and you can put up $160 to make $40 with a high probability of profit. There's a lot of different choices that a customer can make that are capital efficient. Like if you buy 100 shares of stock, you have to put up $1,000.
Right.
If you do this one spread, you have to put up 160. So it's about capital efficiency. And that's why people use options. That's why they're so popular. That's why they're growing at, 50, 100% a year compared to other products. Like stock business hasn't grown at all. But the option business has grown by, 40, 50, or 60% a year. The futures business has grown by 30, 40, 50% a year because they're all the exact same. They're just more capital efficient. Let me show you something really quick. SPY, right? If I buy 500 shares of SPY, see 500 shares here at $400, just under $400 a share. This is going to cost me, okay, at $400 a share times 500 shares. This is going to cost me $200,000 to buy 500 shares. Crazy, right?
Right.
If I delete this and I buy one S&P future, $12,000. So let me show, they're the exact same thing. If I buy 500 shares of spiders, click on the offer, buy 500 shares, it's almost the buying power for this trade is just under $200,000. Now I can borrow half of that. So I only have to put up 100,000, but I have to pay interest on the balance. But I can do it for 100 grand. But if I decide, hey, you know what? Forget this. I'm just going to buy one S&P future. I am literally only putting up $12,000 and all the borrow costs are already in that. So
what about the spread?
What
about the spread? What's the cost in the spread?
The spread is the spread between the bid and ask is $12.50.
$12.50.
That's it.
Okay.
Okay. The entire spread is $12.50. If you buy 500 shares of stock, the bid ask spread is $2. There's 2 cents. Right. And that means you're going to pay $10.
Right.
So they're the exact same cost.
Same thing. Okay.
They're the exact same cost.
Ask.
The difference is that when you buy the future, the carry cost, meaning the margin cost and everything, are already built into this price. So you're still only paying $12,000. That includes all the dividends and carry costs. When you buy the SPYs, you have to put up 100 grand and borrow 100 grand at a higher interest rate. But you can also use ES options, which are all these options here, which are futures options, or you can use SPY options if you so desire. So the other reason that somebody would, for example, use options is you could decide, hey, you know what? I'm just going to go buy these 50 Delta calls, and to do the equivalent of 500 shares, all I got to do is buy 10 of these. And so for $8.50, let's say, or $8,500, I just bought the equivalent of 500 shares of stock. So
Wow.
I can buy the options and use 8,500, but I have premium risk, but that's the exact theoretical equivalent. So somebody asked you before, why would you use options? Because for $8,500, I can buy the exact theoretical equivalent, perfect, absolutely theoretically to the penny for $8,500, or I can use $100,000 cash and borrow $100,000 cash, or I can use $12,500 and buy the future. Now, that's why people use derivatives. It's for capital efficiency, because there's a final piece of the puzzle. The more capital efficient you are and the more money that you don't spend on just using stock trades, and remember, stock trades intraday could be 4-to-1. So if you scalp intraday, it's a little different. But that means the more trades you can make, and the more trades you can make means the more efficient you can become. That's the law of large numbers. The more predictable your outcome will be. So anyway, I went off on a rant there, but now hopefully you understand.
Oh, I got it. Now, just one last question about it. Could you day trade options?
Of course.
Right. Okay.
But hold on. Options, if you day trade the same option, they fall under the pattern day trading rule.
It does.
Because that's a FINRA rule. But you can buy one and sell another one. In other words,
if you pass a day trade, if you have the one $25,000 day trade, or
first of all, if you're over 25,000, nothing comes into play.
Nothing affects you.
Okay. If you're under 25,000, if you buy and sell the same option, that counts as a day trade.
That day trade, right?
If you buy one option and then just sell a different strike, that does not count.
Okay. All right.
Or if, now the other thing too is futures options and digital currencies do not fall under the pattern day trading rules. So you can trade as many futures as you want. You can trade as many futures options as you want. You can trade as many small exchange futures as you want. You can trade as much Bitcoin in and out as you want. None of those fall under the pattern day trading rule.
Well, the only thing that people always tell me about the futures, and you said this last time in the show, and actually I tell people this the same time. I've been saying the same thing. They always feel like futures is a lot more riskier than just to trade the equity itself.
They are the exact same thing. The difference is if you don't understand the notional size of futures, that's where you get into problem. Like, here's the difference. If you're going to buy, just as an example, if you're going to buy SPYs, okay, and you want to buy 100 shares, all right, you have to trade the micro futures. You can't trade the ES because those are 500 shares. And a lot of people don't realize the notional size difference. Like, for example, if you want to trade, they're notionally, the average future is $100,000 in notional. And if you only want to do, let's say you wanted to trade, I don't know, let's say you want to trade 100 shares of AMC. You can't trade 100 shares of AMC and then do a futures contract against that. But there are micro futures now. So you can trade, for example, MES, this is only 50 shares of spiders. So if you wanted to trade, let's just say as an example, normally you wanted to trade 100 shares of stock, you can just trade 2 micro futures. Go to 2, and you can see here, only requires $2,400. Now, if I bought the stock outright of 2 of these, the requirement of 100 shares of spiders would be $40,000. The requirement for the exact same equivalent is $2,400 if you use the micro futures. Now, if you want to get even smaller, we have these futures, which are the small exchange futures, SM75. This is like the same thing as IWM, but this future is the only equivalent of 16 shares of spiders. So you can do 500 shares using futures, you can do 50 shares, or you can do 16 shares. It's super cool. Mm-hmm. All you got to do is learn about this stuff, because it's all just math and it's not very complicated.
Well, when I teach my students, I always tell them, listen, the best way to learn anything, like when you're trading, like you just mentioned, and you said last time, like I was going to say, just buy less and trade more. That's
just do it.
Yeah, just do it. Just do it. And don't get off this damn demo mode, because demo, the only thing you're using it for is just to learn the platform. Buy one stinking share. Like people like, I'm a little nervous. Buy one contract. I mean,
exactly. Buy one contract. Buy one share of stock.
Buy one share of stock. What's the worst thing that could happen? You lose. You know what I mean? Like, that's part of the game.
And we don't even charge commissions for stock. It's free.
There you go. All right, Tom, I know we're out of time. Just one last thing I think people are always asking. And by the way, I know we talked about this earlier. We couldn't talk about it, but I definitely want to meet up with you. I got to show you this level 4 thing. if we can get this thing on your platform, I think I'll send you thousands and thousands of traders, you know, and you're probably going to see more trades from me than you've ever seen in your life. I'll probably compete with you, but it'll blow your mind if we could just implement it. It's pretty easy, and your competitor's already doing it. So we got to figure something out.
Okay, we'll take a look.
But the last thing I want to mention to you is like before we go until we meet next time, what is your long-term feeling about the market? Because now we broke all-time highs. Is the stimulus package going to do anything? I mean, what should we look for in the future? I mean, what do you think the long-term effect is going to happen with the stimulus?
I am not I'm not a person, I'm an efficient market theorist. What that means is I believe everything that's out there is built into market pricing. So I'm not one of these people that believes in fundamental or technical analysis. That said, I am someone who, you know, I watch the market basically. I think I've traded for 10,000 straight days. Like, in other words, for 40 straight years, I don't think I've missed a day. So I'm a total junkie. And I'm still not right any more than anybody that's been doing it for 2 days. like I think I'm 100 times better, and I'm not any better than anybody that's been doing it for literally 2 days. That's how difficult it is to pick anything. But when I look at this market here, I think it's I'm very happy that it just had a nice little correction. I think we are in for a lot of market chop, but I believe that the real risk is probably that I think the risk is actually a little bit lower, not higher. I don't think we're in crash mode yet, but I think if you're looking for like, where is the outlier risk? I think that the way the market's trading to me, and the way that the way the skew is built up in a couple of these really speculative stocks like the GameStops of the world, and the way a lot of the past market leaders are just acting so bad, I think that the market has a little more downside than it does upside right now. So I'm looking over the course of the next couple of months for the market to trade in a range, maybe 5 to 7% downside, maybe 2-3% upside.
Is that, I feel that, you know, I see 2000 happening all over again. I'm not saying that we're going to have a crash or anything like that. I just see that with the whole thing that people staying home and people have to make money. I'm just finding that more and more people are just say, you know what, what's another alternative? And they're just going to the stock market. And when you have more buyers than sellers, you're causing more liquidity and the stocks are going up. So, and that's what I'm seeing. Like people like, I remember back in 2000 watching these financial stations, and people like these mutual funds were complaining, like, they just keep sending us money. We got to buy something. We just can't hold on to it. They're like, I don't want to buy it. That thing's a fortune. I'm not going to spend. It's like buying a Tesla for 200,000. It's like, you know, it's only worth 50, but they keep getting that 100, you know, you got to keep getting all that money. And I see that happening now, that just like more and more people just keep asking, just want to get more into it. Like you said earlier, if they could just get rid of this dumb day trading rule for certain people, because I know it doesn't make sense, and let people just let the markets trade its own. I could see it probably going higher. My concern is just that with all the stimulus package going in, they're going to bail out a lot of these people. And then what happens after that? If the economy doesn't come back, I mean, we're going to ask for more trillions. So I see the economy coming back. I mean, I see it. Listen, I just booked a plane ticket from I don't know if you flew recently or whatever. I just booked a plane ticket to Florida. I can't believe how much money it is. I can't find a hotel anywhere. I mean, I thought you can get a plane ticket from New York to Florida for $30. It doesn't even exist anymore. It's like $500, $600 now. So I'm like, buy the airlines, and the airlines are doing great. I actually, you know, I always, to teach everyone a valuable lesson, if you want to teach your kids a valuable lesson, and this is a tip that I'm going to tell everybody. Here in New York, what we do is, you know, we give money. You know, weddings, you know what it is, Tom. You've been down here. You know, we don't give gifts. We just give money. So what I tell everyone is this: don't buy them the gift. Go open an account at Tasty Trade, put $200, buy something that you like, and just leave it alone. And let them know. And trust me, it probably will be worth maybe $2,000-3,000 when they're 18 years old. You want, like I taught kids when we talked about buying a silver coin. I gave the kids a silver coin when I was paying $11. We talk about this all the time. We joked around it when you were down, when you bought that I don't know, the $4,000 block of silver that's at your mom's house, something like that. You told me that you use as a paperweight to hold the door open. I think you told me, but you want to teach people how to make money. I mean, and it's making the new generation of kids in this world starting to realize, you know what, they're going to have to trade regardless. So if there's anything you guys out there, next thing you go to a communion or a bar mitzvah or whatever, just buy them stock. Don't give them money. Don't let the parents use it to pay the bill off, buy them something, open an account with Tasty Trade and do it. That's the way I look at it.
It's a new paradigm. It's a new paradigm. We've engaged an entire generation of tens of millions of young kids, which is awesome. And yeah, I think everything's going to change forever. So
I think it's going to change.
It's exciting.
It is. It is. Tom, thanks you so much for being here. And everyone, don't go anywhere because we're going to be right back. I'm going to talk about a little bit about the market too. I'm going to tell you what's going on. I'm going to take on your questions and go from there. But we're going to send out a link to everybody to watch the recording. This has been recorded, so you can get back and review it, share it, tweet it, with your friends. And once again, we'll post a link up there if you want to get in on one of the promotions that we do with Tasty Work. So please click on it and open it. Like I said, you're going to have to try a couple of brokerage firms out there, different platforms, and you know what?
I love our stuff.
Makes everything different.
Anyway, thank you everybody for listening, and thanks. That was a great conversation. I could sit around and bullshit with Fausto for hours on end. I love it. There's a ton of energy, and so take care, everybody. Stay safe, and Fausto, can't wait till next time.
See you, Tom. Thanks, everybody. All right, everyone, just stand by for a second. Let me just take over the screen from Tom. Just give me a moment here. There we go. Hold on one second here. There we go. All right. Could everyone see my screen okay? Just give me a chat back if everybody could see it. Fine. All right, perfect. All right, so anyway, let me just blow this up a little bit bigger so you guys can see a little bit better here. And let me just pause it so we can restart the recording again. There we go. And let me get my pointer. There we go. There we go. All right, hope everybody can see that okay. Oh, am I sharing the wrong screen? Hold on a second. Yep, sharing the wrong screen. There we go. Screen one. All right. Is that a little better? There we go. All right, good, good, good. All right, so anyway, listen, Tom's been a really good friend of mine. Like he said, we've known each other for 2 decades, and you could see, listen, great traders surround themselves with great traders. And that is very important. And being endorsed by certain brokerage firms, believe me, they do background checks. They want to make sure that when you're referring somebody that you know what you're talking about, because we all have a very good niche. We don't do everything, but we have a niche in something. And, and I want to kind of talk a little bit about what Tom talked about. I want to be able to answer somebody's questions here. And I want to show you a little bit about what the strategy that I use moving forward in today's volatile markets, because I'm going to teach you guys basically the art of what I do here. Tom is from Chicago, so that's why he's such a great options trader. He basically ran that whole floor down there on the merchant exchange. But I'm going to talk about me being a market maker here on Wall Street and being a Nasdaq market maker and tell you the things that I used to do. And if you heard what I was saying earlier, I don't know if you guys will listen closely, but remember I was talking about total level 4. Well, his competitors are starting to use it. I'm going to talk to him. We're going to get it on there. And when I show you this platform, and like you heard what he said, he does everything to give you everything to give you the edge when it comes to trading, so you don't get chinched out, just like I did. Some of you, my students out there, and sometimes I'm on the phone. I'm like, I just got locked out of a trade, and like, why did they do that? Robinhood locked everyone out of the trade. Why did they do that? So you obviously don't want to be in that predicament, especially when you're dealing with certain brokerage firms, because you can't get them on the phone. So I'm going to talk about what the strategy is. I'm not going to take too much time, probably going to go about 30 minutes. But what my goal is today, before everybody leaves, is I want to invite every one of you to come in to the original day trading room that I started 25 years ago. So everybody's going to get an opportunity to get into that room. You're going to see us trade in the pre-market. You're going to hear I do live commentary. but I want to show you what our whole thing is about trading. Now, just really quick regarding just a quick disclaimer, I'm not here to bore you with it, but just remember, guys, trading, like Tom just said to you, it is very risky. A lot of people try to do it. They blow up their accounts. They don't know why they get involved in it, but there is a very high risk in trading. So please make sure you don't go out there and risk what you can't afford. You know, listen, if you're, somebody that's a bad gambler and just keeps borrowing money, this ain't for you. All right. You take a little money, you see if it works, and then you go from there. And that's the goal. Now, what are we going to basically learn? I'm going to talk about how to find the best stocks to trade. I'm going to talk about navigating through high frequency trades. I'm going to talk about discipline and finding also how to read level 2, level 3, and level 4. I'm also going to talk about trades and exits and entry points, and most importantly, Nasdaq market makers' biggest tricks that you don't know about. How do I know about it? Like I just said, I was one of them. Now, remember, trading, fellow traders, this is a game. It's all it is. It's a game. You just got to know how to play the game. And, I've been a regular guest speaker at the Nasdaq Center talking specifically about what we're going to see here, which is called Nasdaq Total View. Now, everyone's going to be able to get this. Nasdaq wants you to use it. And you're going to see that if you're trading the stock market, you're going to see how this is going to help you to see all the data. So let me just do a quick poll really quick right here. And let me just want to make sure this, I'm going to launch this poll. Now, could you guys just tell me, anybody here have level 3 access? So just give me a chat and let me know. Do you have level 3 access here? Yes, no, maybe, whatever it is. Not sure. Sella, could you put it in the chat? Because I'm going to share it with everyone. It's nice. Now, all of a sudden, you guys could be engaged in a poll. See how you all answer this? All right, I'm going to stop the poll. I'm going to share because I can't wait all day here. All right, so you can see that literally almost 60, 70% do not have it. All right. Moses, if you can't hear, raise up your volume. I can only speak so loud. I mean, I'm from New York, for crying out loud. We speak loud enough. I scare people, for crying out loud. But what you have right there is you could see the power of how many have it and don't have it. Now, let's think about this for a second. If I'm able to show you where 70% of where the buyers and sellers are, if you could see where all the high frequencies are, if you can actually, if you know what I'm talking about, I could show you where all the algorithms are happening. How much smarter and better trading decisions would you have? You see, my strategy is I don't use indicators, okay? I don't use special platforms or software. I just follow the money. That's it. Now, how do I know this? Because I'm one of the original day traders. I've been doing this for over 25 years. If you're reading the old books, I'm one of the original Souls Bandits. So if you're trying to see, you hear about all these day traders that come out, well, guess what? I'm the one that started it all. There was only about, no, not started, it was about 1,000 of us. Now I could say now that, there's over a couple 100,000. So, nothing really has changed other than technology got a little bit better. Now, I founded CyberTrading University because I'm here. The way you become a very successful trader is I trade with my traders. So when I actually left my brokerage firm, I was an entrepreneur. I was thinking about bigger and better things. Like Tom told you, I was a junkie, but I hate getting ripped off from the brokerage firm because they were banging us out with ticket charges. They were charging me desk fees, all that. But you know what I learned? I learned enough that they show me how to play the game. Once I learned how to play the game, I grew up and I moved on. And a lot of you probably don't know that. So I'm basically going to go out there. I want to show you basically the strategy of what really has not changed. But before I do that, I want to do another poll. And I want to know what kind of trader are you? Okay. Are you a stock trader? Are you a options trader, futures, Forex? Just see how you guys answer this question. What kind of trader is everybody? Just want to see. And guys, don't be shy. Nobody's going to yell at you, make fun of you. See how you are compared to everybody else. All right, so we got a lot of options traders, a lot of stock traders, Forex. I'm going to end the poll. I'm going to share those results so you can see where you're at, okay? So you could see that a lot of us are trading a little bit of everything. So let me kind of explain my thought about this. If you're not a good futures trader and you've been doing it for more than 30 to 60 days, you might want to consider trying a different market. If you're not doing well in options, you know, you've been doing it for 30, 60 days. I mean, you saw one of the best in the industry right there talking to you. And, you know, not all of us could be as good as him, but to be good as him, you have to trade as much as he do. But if you're not doing well after 30, 60, maybe 90 days, maybe you should try a different market. But the thing is, you're in the stock market. So if you're doing something, and I kind of use the metaphor, if a doctor puts you on medication and you're not getting better, but you're getting worse after 30, 60 days, you're probably better off finding a new medication or finding a new doctor. More times you better find a new doctor. But that's basically when that comes out. Now, the question, why are you here? And the question I always tell everybody, you're not here to learn how to make money. You're here to learn how to stop losing it. One of the biggest reasons why people trade is they all want to learn how to find that crystal ball. Did you ever thought for a second, maybe I should learn how to stop losing? Like, does anyone ever taught you that? Because that is about 80% of what we teach. We don't teach people how to make money. That's easy because the winners take care of themselves. It's the losers people have a problem. They don't know how to take a loss. They don't know if things go against them. They don't have somebody, a coach behind them say, hey, what the hell are you doing? You know, listen, if you fall, we've all fell. And some of us fell pretty hard. And in business or in anything, it hurts. But if you don't know how to get back up and start over, you're out of business. You can't be on the floor and sit there and get knocked out because you're going to get knocked out. But getting knocked out makes the best out of us. And that's how you have to learn how to trade. Now, how to do that? You got to always ask you, who really trained you? So let me ask you, let me do another poll. And I only have about one more after this. I'm sorry, I don't want to drive anyone crazy. But who really trained you? Are you self-taught? Did you take any paid courses? Do you have a coach, a mentor? You know, just let's see how you answer that. And by the way, no one can see what you answered. I can't even see it. I just want to share with everybody else. Because trading is a 90%, let's say 80. I hate saying 90, kind of hurts. It's an 80% failure rate. Because everybody thinks you could watch it on YouTube and you could read a couple of books and, you know, what do I have to lose? Listen, it doesn't work that way. Trading, education is not as expensive as people think it is. That's a misconception. But you got to surround yourself with good traders. And you could see that there are a lot of you here that are self-taught. Do you want somebody to manage your money that was self-taught? What makes you any difference? But do you want someone to manage your money that's losing your money? You're better off doing that yourself, but you got to know what they're talking about. All right. So you got to learn before you could earn. And that's the biggest goal when it comes to trading. So let's begin. Did you guys see the stock CAN today? Anybody see KAN? Anybody trade KAN? KAN. What does this company do? I have no idea. But look at this chart right here. I want you to look at this. This stock from 9:30 went from $22 up in 10:30, ran to 26. And then it ran from 26 at 2:30 all the way to 30. If you bought $1 of that stock, if you made $1 on 1,000 shares, that's $1,000. It's $250,000 a year. Stock moved literally $8. What about 50 cents? You couldn't find 50 cents in that stock anywhere? You could have chased it, all day. You see, you don't have to make a lot to be very successful at it. And there's a lot of things that are moving, but the question is, how did you find it? Where did it come up? Why did it go up? How did you know it was going to go up that high? Well, what you need to do is follow the smart money. What do I mean by following the smart money? I had some guy ask me that in an email. What the hell is the smart money? The brokerage firms, the institutions, The insiders, the high frequency trades, all those algorithms that you heard about, that's the smart money. Oh, now I get it. Now I get it. Okay, well, that's the goal of being a successful trader. You can't outsmart the smart money, but you can join them. You can watch them. That is the whole strategy behind CyberTrading University. How do I know that? Because I was an ignorant 22-year-old kid that lived in New York and says, why is Wall Street Wall Street? Why is everybody here wants to get in finance? Why are these people have driving an 18, 20-year-olds driving Ferraris? What instead my coming in and I'm driving a Ford Pinto? I mean, what am I doing wrong? Oh, it's the stock market. But when I try to do it on my own, I was like, what am I doing wrong? And then I'm like, there's only one easy way to explain it. Why don't I just go work for somebody? You see, my dad always taught me something. I know some of you are a little older and you probably pass this down to your kids and grandkids, whatever it is. My dad always taught me and says, son, you hang out with troublemakers, you might be a troublemaker because you're guilty upon association. I says, no, Dad, I don't want to be a troublemaker. I want to be rich. He goes, you want to be rich? Hang out with rich people. You like being in the trading business? Go find the best people in trading and work for them. Do whatever it takes to get in there, even if it's for free. Whatever it takes. Oh, but I need to make money. It doesn't matter. The money will come later. And that's what most people don't realize. They want to learn like today. They want the money now. It doesn't work that way. But it's not going to be a 4-year college degree. So how do we follow the money? How do we find these big pops? How do we know what's going up and going down? It basically comes down to this. You just got to follow and keep it simple. It's called the KISS method. So I asked everybody this question. Did you have level 3, which is total view? Let me explain to you what it is. Numbers. Okay. So you saw Tom show the option way of looking at it. Right here, I'm going to show you the stock way of looking at it. On the left-hand side, these are buyers. Okay. Maybe this will help out a little bit better. Maybe if I draw it a little bit. These are your buyers and these are your sellers. People that are on the bid side, they want to buy the stock. People on the sell side, those are people that want to sell it. I know this sounds like kindergarten stuff, but you know what? I got to do that. This is the price right here is the highest price somebody wants to buy it for. That's how many shares somebody's looking to buy. And there's how many orders are out there. Now, you could see that there is, if you work your way down, there are 40 different orders around the world. You have 30,000 shares that want to be bought at $20 and $22.50. So when you're looking at it, it's basically a chat room. People are advertising what they want to buy it and where they want to sell it. So if you go out there and you want to buy a stock, guess what? You're going to be on this screen. If you want to sell stock, guess what? You're going to be on this screen. So that's basically what you're looking at. You're seeing the buyers, you're seeing the sellers. You're a negotiator. That's trading. Now, that is the raw data of the stock. Now, how do we use this data? Well, let me move on here. Let me clear this out, get back my pointer, and move on. I'm going to ask everybody a question. How do stocks go up and down? What do we need it for to go up? And what do we need to go down? Let's see how you answer that question. Just put it in the chat room. Thank you, Michael, Bill, John, Bonnie. Put the 2-letter words, 2 letters, if you feel that you're not a good typer. Larry, Wendy, Terrence, Norman, you're right. You need buyers and you need sellers. Can everybody just write that? I like called BS, you know? I don't like to use what other people might think of BS, but let's just call it BS. BS. Remember those 2 words, BS. And when you really think about BS, I'm like, wow, that kind of makes sense in trading because you don't believe anything you see, right? BS. So, buyers and sellers. When the stock goes down on a chart and it goes up, what makes it go up? Buyers. When the stock goes up and it hits a resistance, what brings it down? It's not a resistance, it's sellers. So let's look over here. We're looking at the stock RKT, Rocket, okay? Stock was a fun stock to trade a couple of days ago. Stock was a rocket, actually. You could see how the stock went from $30.50, dropped down to $25.50, stopped twice, and went right back up to $28.50. Why in the world, out of every single number, did it stop at $20.50? Very simple. If you look over here on the Nasdaq book viewer, which is this Nasdaq software, by the way, you could see there's a 58,000 share buyer made up of 5 people out there. So obviously somebody wants to buy a lot of it. Right there, 25.50. Now you got to understand, there are 10 share buyers, there are 100 share buyers, there are 500 share buyers. Who are you going to watch? Who do you trust more? Fausto? Tom? You? Joe? You, Mike? Or the guy that's buying 58,000 shares? Whose side would you be on? So when you're seeing a stock go down and you're always wondering, oh my God, when is this thing going to stop? Why does it keep going down? Is it going to stop? Is it any? Yes, it will. If you got the buyers out there. And if you don't have the right data, you'll never see that. That's why people fail. And the same thing goes here as a resistance. Mara, here's Mara stock that we trade. Stock goes from 23.80 all the way up to 25, comes right back down to 23.40. Why did it stop at 25? Why didn't it go to 27? Why didn't it go to 100? Why didn't it stop at 24? Why 25? And no, it's not because of it's 25, a whole number. It's because there was if you look right here, there was 127,000 share seller out there. There's no other reason why. I mean, you think a 200 share seller is going to make resistance levels? Do you think 1,000 share seller is going to make resistance levels? No, it's this guy. Why would you want to buck the trend? Don't look at the chart, because remember, sellers equal resistance. See, most people do things backwards. They look at resistance. I don't look at resistance. I look at sellers. Then I'll look at resistance, because resistance is made by sellers. Exactly. Volatility. Now, Terrence, regarding about some of you with options and so on, think about this. Everybody has a strategy. You saw Tom talking about you could buy this, you could sell that, but what is the actual strategy? Now, the thing is, when it comes to stocks, it's pretty much black and white, okay? There's a lot of different strategies to trade options, okay? And everyone has, they just have butterflies, Greeks and, leaps, and everyone has like a little strategy. My strategy is I follow the money. So if you do trade options, you could use this to have a game plan like, you know what? I want to trade an option. Let me look at the long-term effect. Let me see where the big buyers are and the big sellers are. And that's how that kind of answers that. Now, let's look at this example right here. We're looking at DraftKings, okay? DKNG. Can you guys tell me, actually, I'm going to do a poll. How about this? Let's do a poll. Is this stock going up or down? Let's see how you answer this question. Alan, we didn't get to that question. That's a great question. Alan's question is, are these false bids and offers? And I'm going to get to that question in a minute. But let's see how you guys answer this question. By the way, if you can't answer this question, you damn well better quit trading. I'm just don't mind me being very, abrasive, whatever. But listen, if you can't figure this one out, I don't know what to tell you. All right. And by the way, if you can't answer this question, then you really should quit trading. At least the other person tries. All right. So I'm going to end the poll. And if you said it was going down, congratulations. You are absolutely correct. That is a great, simple question. You just graduated the first grade. Now let's go to the second grade. What do we need for this stock to stop going down? Can everyone answer that question? What do we need to stop it? Is DraftKings going to zero? It could happen. I've seen it. Henry, Edward, Sam, Joe. We need buyers. Oh, now let's think about this for a second. Can we go back in the past and see if those, are those buyers in the past indicative of the future? No. See, that's the past. You want to be able to predict the future. You can't use a chart to predict the future. You need to see where they are. How do you see that? You got to go on level 3. So let's go hop over here. And we're going to go look on the buy side. We'll look for buyers and look right here. Oh, look at that. There's a 55,000 share buyer at 57. I mean, if it was up to me and you could have bought at 57.84 or put a limit order at 57.70, I'd rather put at 57.70. Why go out there and pay 14 cents more when the real significant buyers all the way down there? Because guess what? Like it or not, that's where it's going. So what did it do? Came right down to 57.70 and went right back up to 59.80. Now, does that seem hard? Did I lose anybody? Just want to double check. We got over 200 people in here. Did I lose anybody yet? Terrence, no. Anyone else? Mike, no. Julie, no. Anyone else? Was that hard? It's like almost like common sense. You're probably looking at it like, it can't be that easy. It really can't be that easy. And actually, you know what, Paul, it is. Seems easy, right? It is. It's really not. It's not that hard. So let's move on. Let's look at this one. If you wanted to look for resistance levels, we're looking at a stock, SREN. Where they are? On the right. You work your way down, look for some big block trades, boom. I would probably say if this stock was to go up, I got to have a game plan, right? My game plan is, where am I going to sell it? And I can see right there at 725, 56,000 shares. I'm not going up against that guy. Okay. Actually, you want a little tip? I would sell before it. So guess what? When you look at this example, this stock looked like it's going up. Oh yeah, this thing is like double top, 20 different green sticks of candles, this and that. Listen, the problem with this chart, it didn't tell you that you're coming up to a 58,000 share seller. And if you didn't see that, guess what? You just lost your profit. See what I'm saying? When I sat down for my interview to be a trader, and they taught me this because we used to use something that was called Instinet in the past. When I saw this, I was like, holy crap. How do you get this data? Oh, it costs $1,000 a month. And I'm like, that's a lot of money for a 22-year-old. And then I'm like, well, do you want to make the 6 figures? I'm like, yeah, but like 22 years old, I don't even got $1,000. And I say, listen, if it pays for itself, would you pay for it? Like if you're making the money, wouldn't you pay for it if you're making the money? I'm like, yo, of course. Great. We'll see you at work tomorrow. Sat down, looked at this thing, played around with it. I was like basically like shooting goldfish in a barrel, The problem with today's traders, first of all, it doesn't cost $1,000. It costs $15 a month. Okay, that's number one. The problem with today's traders is that they want everything for free. And unfortunately, not everything is free. Just not, There's things you're going to have to pay for. Unfortunately, that $2 trillion stimulus package, someone's going to have to pay for that. It looks good right now, but I'm telling you, somebody's going to pay for that. You want a house? You know what? You want electric? You got to pay for it. There's things you got to pay for. Oh, I want it for free. You know what? If it's for free, it's not for me. I want to know why. I just want a good deal. And Nasdaq charges for this stuff. So that's basically the thing that you got to look at, So what we call these things here at CyberTrading University, we call them iceberg orders. See, everything is not what's on top of the water, it's what's on the bottom. That's the way you have to look at it. Alan says, what's the difference between level 3 and level 4? A lot. I'll give you an example. Here's level 4. Okay. Level 4 is showing you the orders, where they are and how long they've been out there and how many shares. Like you see right here, right now we're looking at AMC. AMC when it started this morning went from $11 straight up to about $12.50. Do you see that red heat right there? You're talking about, there's about 900, 10,000. There was literally almost about a few million shares that are going to be sold. And when it came up to it, look what happened. It came right back down. You see right here, big sellers, 70, 80, 90, 100,000. Went up, hit it, boom, it came right back down. You see that seller right there? You see that seller right there? They've been out there all day from 9:30 in the morning till 4 o'clock in the close. If you didn't see that, guess what? You just got suckered in and you would have got crushed, and then went from $12.50, and now you're probably licking your chops when it's at $9.50. And you're like, what the hell do I do? You know what I'm saying? Like, this is just a program that would show you that in class, you're just going to see more orders out there. Now, what I'm showing you guys, please don't buy into this stuff right now, because I want to invite you in my trading room. Can I at least show you what it looks like? Can I at least prove it to you it works? You know, just come in just once. I just want to show you, because there's a lot of people that can show pretty charts. There's a lot of people that play a big game. There's a lot of people that do nice, photoshopping on YouTube. But why not see it live? Why not see it live? You know what I mean? My staff is just posting up a link right there. Do you think Nasdaq would want Fausto Pugliese to come on the Nasdaq market and talk to all those people? Now, they're an exchange, okay? They're an exchange. It's not a brokerage firm. This is not like somebody's YouTube channel. This is the exchange. You think they want Fausto to come out there talking about something that's going to teach people how to lose money? This is their software. This is the floor of the exchange. Why would you not want to have a seat on the exchange? I wanted a seat on the New York Stock Exchange a long time ago. Problem was, it was like $10 million. And you didn't even make $1. That was just to get down on the floor. It's like, wow, why so expensive to get on the floor? Well, you want to make money, you got to spend it. That's how it goes. So the big thing is this. We're going to talk about time and sales. Now, the next question someone was asking me, how do you know these are real trades? Well, listen, anybody can cancel an order. You get executed, but there's something called time and sales. And when you look at this stock right here, if you notice, the stock was at $13. You see it right here, 13. So it hit 13 and went down, but it came back down, and then it hit it again. And like, wait a minute, it just went to 14. Like, how is that even possible? Well, apparently this guy that was holding it back at 13 was getting executed. Look at the time and sales, 13, see green, 18,000, 5,000, 6,000, 2,000, 2,000, 2,300. A lot more greens and reds. Somebody actually bought it. Oh, by the way, that could happen. And when it does, that can make the stock go higher. So, question to everybody. You ever sometimes do a trade and you feel like every time you buy it, the thing goes down, and every time you sell it, it goes up? And you think like somebody's watching you. It's like, I don't understand. It's like every time I do this, it's like I'm always on the wrong side. Well, let me answer that question for you. You know what your problem is? They're not watching you. You are not watching them. That's the problem. If you're watching what they were doing, then you'll know what side to be on. You see, remember when you came in here and I told you Cyber Trade University does not teach people how to make money. We teach how to stop losing it. Well, the goal is you would stop losing it if you knew where everybody else was selling it. The problem is everybody else wants to hit these home runs. They're like, oh, maybe it's going to go higher. Oh, maybe it's going to go higher. And then you're losing money. Like, oh my God, when's this thing ever going to stop? Well, do you know where the next biggest buyers are? I don't know. Well, if you don't know, what the hell are you doing in the first place? Are you going to start hoping? That doesn't work too well in trading. Now, the next quick thing that people ask is, do you use indicators? Now, personally, I don't use indicators. I'll tell you why. What chart's easier to read? Chart number 1 or chart number 2? Can everyone answer that question? What chart is easy to read? Wow, you guys answer this pretty quickly. Sam says 1. Terrence, I don't know what that means. Anyone else? William says 1. Edward, what about, listen, what about you? I didn't hear from you, Alan. What are you afraid of? Barb, Lance, Charles, Chip? Come on. Craig, what are you guys scared of? You're going to get the answer wrong? Listen, if you're scared of getting the answer wrong, you should not be trading. Well, let me just tell you. Yeah, I mean, you definitely need special glasses, Christo, for this one, for number 2. Listen, number 1 is a hell of a lot easier to read than number 2. The problem with indicators is that they're laggers. And, you know, if you're always looking behind you, you're not looking in front of you, I don't know. I would rather look at the orders where they are. I don't care what happens in the past. I mean, they're always right. And by the way, they're all made by mathematicians. I don't know if you know that too. It's right, Terry. It's old news. It's old news. You don't want, and not only you want new news, you want to know what's the upcoming news. And the upcoming news is the orders. That's why people get confused. You know, you're going into this game. Everybody wants to learn how to trade. Everyone's excited about doing it. They love trading. They see the opportunity. You see what's going on in the market. You saw what happened today. But you got to know how to play the game. And it's not that hard. And I want to show it to you. Okay? I want to show you how we keep things very simple. Right to the point. Nothing crazy. That's all it is. And what you're going to see is that another thing, you don't need to make a big move in the stock market to do very well, specifically in day trading. Like I like to day trade. By the way, don't look at scary like, ooh, day trading is like you could lose a lot. First of all, day trading is the easiest thing. I don't know why people think day trading is very difficult. You can sleep at night when it comes to day trading. You know, you don't have to hold positions overnight. Anything can happen tomorrow, you know. By the way, if you're a good day trader, you'd be a phenomenal swing trader and a great options trader because it's a movement, what happens over the course of the day, which trickles into the following day. So who here wants to come into trading room? Who here wants to watch pre-market trading? Who here wants to see, you know, why CyberTrading University has been around for over 25 years? Who here wants to see a 12-time world champion and see, you know, how these things go up and go down? Well, now's going to be your opportunity. I want to invite all of you guys to not be scared of trading. I want to show you how simple it is. And not most importantly, I don't want you to look at me. I want you to look at the people that we've trained and see how they do. You understand? Listen, if I could teach a 90-year-old grandma do it, you could do it. All right. You know, no disrespect to her, but it's not really rocket scientist. But when you work for a good company and you surround yourself with good traders, it just makes it that much easier. And that's why CyberTrading University has been endorsed and featured by more brokerage firms than anyone in the school, in the industry. And let me tell you, that is very hard to do. You think Tom Sosnoff will come here at CyberTrading University and want to talk to someone that's teaching people how to lose money? You know what I mean? So that's the beauty of it. So this is what I'm doing. I want you all to come in my professional cyber group trading room. We're going to start early in the morning. Every one of you are going to get access to talk to an education advisor. We're going to give you a couple of videos. We're going to introduce you to everybody. It's a really fun environment. It's exciting. And you're going to see a lot of people, you know, how we make money and how we, most importantly, how we control these losers. Now, the thing is this, nothing's free. Nothing's free. And I'll tell you why. I don't know who you are. Okay. We sent an email. We want to know who you are. We don't know if you're a heckler. We don't know if you're a competitor. So I'm asking for $9, which is a donation for an application fee. Okay. And by the way, it's money back guaranteed. If you don't like it, I don't care. You can have it back. I don't need your $9. But the $9 is going to prove to me that you say who you are. And this is what you're going to get. You're actually going to talk to our staff. You're going to get, you know, a crash course on day trading. You're going to get watch lists. You're going to get live commentary. You're going to get full access to the trading room. Okay. All this for $9. The link is right there. Just click on it. Okay. And as a bonus, which I don't even know why I even do this, but I know why I do it, because I'm looking to recruit traders. First 20 people register, I will actually do a coaching class with you. Listen, we got to talk. You're going to see some crazy stuff. You're going to look at stuff and be like, wow, how does that work? Well, listen, we're going to have to talk and have to see if you're qualified for it. Wouldn't you like a doctor to kind of talk to the doctor first before you go into the surgery? As much as you want to do the surgery or you thought you needed it, you might not. Trading might not be for you. So let me do the consultation and tell you. But come to the room. It's $9. You got nothing to lose. Okay. Let me just go through a couple of questions. Joe, you're more than welcome. Thanks for coming. Norbo, I don't know what you mean by that, but you got my email right there. Follow up with our staff. Call the office. We'll take care of it. Okay. By the way, if you didn't fill out, maybe you didn't fill out the questionnaire after you registered, because that is a very important part. It is optional, but let us know. Did you take education from anyone? Do you have a brokerage firm? How much money you have? We have 5 questions. We need to know a little bit about you. Can't let you in there, because right then and there, we could just diagnose you and let you know what your situation is, and we can, at least veer you in the right direction. All right. Philip has a question. Thanks, Fausto. I would just like to know how long would it take to learn to trade platform on Tastyverse tomorrow? Well, Phil, the big thing is this. Don't go crazy worrying about opening brokerage accounts. Right now, if you don't have one up and running, you don't need one. Right now, what you need to see is just see if people make money doing this. That's all you need to see. Don't worry about it. That's the least of your problems. Okay? It's a pain in the ass to open a brokerage account. Okay? It really is. Got to move money there. Got to fill out and give you social security number. Here, it's $9. Let me show you in the trading room. Let's jump in at 8 in the morning. Let's see what's moving, what all the great stuff is all about. Okay? Any other questions? Do you only trade Nasdaq stocks since level 3? No. Actually, Christo, that just shows you that you definitely got to get into the room. You could trade the New York and Nasdaq, and basically you could trade the exact same thing. They all trade the same market. You got, it's just not the Nasdaq total view. You got Archipelago, you got EDGX. They're all trading, electronically. Is this an auto rebuy? Alan, if you want to continue after 7 days, it's 149. If you don't, listen, I don't need the scrutiny. I don't need to cause any problems. If you don't want it, just cancel it. If you get charged, we'll refund your money. Listen, we're not like Raging Bull, right? We don't do that. Okay. If you mind, we don't give any, I don't need the scrutiny. Okay. I got a 5-star rating on Google for a purpose. I have a AAA rating in the Better Business Bureau. There's a reason for that. Listen, I'm looking to teach people I could trade with. That's really what my goal is. You want to learn how to trade? You want to be part of a team? You want to be part of a company? Then here's your opportunity. If you don't, then that's okay too. Anything else? Any other questions? You're more than welcome. I hope you guys liked it, being here and listening in. Listen, it's a lot of fun. You listen to all these traders. You're seeing people like me, and you're seeing guys like Tom. And you got to understand something. This is not like something like I invented, like, is this your strategy? No. Tom's strategy, he didn't make up that strategy. We've learned this is something that's been passed on generation after generation from being a trader. That's all. You just, some people are just better at it. You think it's like, oh, you invented football? Wow, you invented football? No, I'm just a good player, and you know what? You want to come on my team? I'll give you a shot. You can hear that little binging going in the back. Let me just do a couple of shout outs right here and welcome a couple of new people that just showed up. Who we got here that just registered? We got here Jay Perksky from Minnesota. All right. Welcome aboard. Andrea Rodriguez from California. Just got your registration. Jay Galler from Connecticut. Just got your registration. Lawrence from Discovery Bay, California, got your registration. Now, guys, listen, when you register, let me just give everyone a little heads up. When you register, you're going to get access to our portal page. You're going to see, you're all going to have a education advisor. It is imperative that you speak to them. You just can't get into the room because honestly, you're going to get lost. You're really going to get confused. There's certain lingos. We want you to know what you're looking at. Listen, we do an orientation. I'm very big when it comes to customer service. If you're not happy and you don't get it, you're not going to continue. All right. So let us do the walkthrough. Let me show you what it's all about. And guys, listen, it's only $9. Okay. And it's a way that, to see what day trading is really all about. And by the way, we just don't day trade. We also swing trade. A couple of more people are coming in here. Christo, oh, that's you, Christo Summit. I live on Summit, by the way. Charlotte, North Carolina. Welcome aboard. Look forward to teaching you. Look forward to seeing you in the room. Juan from, Chicago, got your registration. Victor from New York, Manhattan, just got your registration. Jamie from, Nova Scotia? All right, cool. Welcome aboard. Got a lot of Canadians in the trading room. All right. What happens after 7 days? No automatic billing. After 7 days, if you want to continue, it is, like I said, it's $149 a month to be in the trading room. If you don't worry about it. We won't charge you. Okay? Any other questions? Any other questions? All right, guys, listen, I know it's been a long afternoon and I'm exhausted actually. So I look forward to seeing you all tomorrow. If you didn't register or you want to come and join us for the upcoming events, we got another one I'm going to do just like this on Thursday, which is obviously tomorrow. So if you want to hear it again, I'm going to do another demonstration on this. But in the meantime, if you register now, you're going to be one step ahead, locking in your date, your appointment with me. So that's the most important thing. Think about it. Imagine sitting and having a conversation with Tom Sosnoff, a billionaire. Wouldn't that be awesome? I wish I was a billionaire. But I'm very happy. Married 25 years, got 3 boys, excited about it. Tell them to come to see you on YouTube. Bonnie, yeah, right. Tomorrow morning too. I'm live on YouTube. Actually, we'll tell the staff to put that link every morning live at 9 a.m. We'll do the audio. And if you feel a little comfortable, not ready yet, that's okay. Come in the room. You could join us there. A couple of more other people here just registered. Lewis from Charlotte. And there's so many coming in here. I can't even read them. Don't worry about it. I'll talk about it tomorrow. All right. So anyway, let me go. I'll see you all tomorrow, everybody. Thank you so much for being here. Thanks for listening in. Come and join us, like us, friend us. Join us our YouTube and Facebook Live also. And I'll see you all in the trading room. And, hopefully everyone be safe and get your COVID shot. Hopefully no one's really nervous about it. And let's all get into the trading business, okay? Thanks, everyone. Have a great evening.